Hey guys, and how are we doing? So in this video I'm going to be showing you or taking you through on how best to analyze forex pair in the market. My name is Trader Mage from Bolu Online Services. If this is the first time in this channel, so a big welcome, and if this is not your first time, I say welcome back. Don't forget to hit that like button, turn on notification and subscribe so you don't miss out amazing videos coming your way soon. So first of all, let's look at our risk warning, and our risk warning says that trading products such as forex and derivatives will not be suitable for investors, and trading will not be responsible for any loss incurred. You may want to just take a screenshot of this to look at or read through what the risk warning says. So back to our chart, which is our business for the day. So why do you need to analyze a pair? Most people, traders, they just enter the market and wait. First of all, before I go on, there's a bonus tip at the end of the video on how best to analyze a forex trade. There's a bonus tip I'll be dropping at the end of the video. So back to what I'm saying. Most traders just enter a trade and they see the red candle and they see, oh, it's red, let's sell, and they take a sell and boom, the account blows. And they see a green candle, oh, it's going up, let's buy, and you just enter and the account blows. So what you need to first do is, once you see a pair, before taking a position or an entry, you need to first properly analyze what the pair or what the market is saying to you. Okay, and I'll just listen out or taking you through those steps on how best to do that. So the first thing you need to do is to identify the trend. Identify the trend of the market. And how do you identify, or from what time frame would you identify the trend? It depends on what type of trader you are. If you're a scalper, you're taking entries of 1 minute, go to 3 time frames ahead of you. That's M5, M15, M30. M30, you look at the overall trend of that, what that is saying, that will determine the trend for a scalper. For a day trader, which takes entry of 15 minutes, 30 minutes, you want to go to the daily. And I'm a day trader, so I would go to the daily and be looking for what the daily is telling me, and I'm seeing a downtrend because I can clearly identify a downtrend. You want to check out how best to identify the market structure. There's a video in the description that will put you through to that. So this is a clear downtrend for me with a day trader. If you're a swing trader, takes entry of daily, you would want to be identifying your trend from the weekly or the monthly. Yes, just a higher time frame above you. So I've identified clearly my trend. That's the first step. Then secondly, the thing is, you identify possible area of values in the market. And the best way to identify these possible areas of values is to identify possible area of values which are in line with the trend of the market you are trading. Let me paint this out. So I go to 4 hour, I've identified the downtrend, and I go to 4 hour, and what do I identify? I identify things like this. Identify a resistance. All right. Identify what? Similarly another resistance. Okay. Identify what? Similarly a third resistance here. All right. Because it's in line. Resistance is in line with what the market is saying, which is a downtrend. Yes. So I'm identifying zones or area of values in line with what the market, in line with the direction of the market. Okay. I would not want to be here and be identifying a support. I'm like, this is support, and I'll be trying to take a support because market could break, because that's not the trend, or that's not what the market is saying. Okay. Then if I want to also identify another area of value, I could identify a downward trend line. Okay, a downward trend line, because what, it is in line with what the market is saying. All right, so identify area of values in line with market is saying. And we have resistance, we have support, we have trend lines. For ICT concept, we have order blocks, and those are some things we teach in our professional course. And in case you want to look at it, to know how to take entries of institutional rejection zone and how best to enter with a chance of getting funded a $10,000, hit the description in the video. There's a link in the video in the description that will take you through on how best to sign up for. So back in the video, after identifying area of values which are your support, your resistance, your trend line, your order blocks, then the next step you do is to identify possible targets where the market could be headed to. So I've identified this resistance, and my next possible target where the market is headed to would be around this zone. So let me just mark it out with an horizontal line, be around this zone. Yes, that's my next possible target because I've identified market came here. So if I was taking an entry of the second resistance, oh, this is my next possible target, because that is where to identify your next possible target where price could be headed to. That's the third step on how best to analyze. So for your fourth step is to identify an entry confirmation candle. Okay, you want to identify an entry confirmation candle. Okay, yes. So what do I mean by entry confirmation candle? Let me just go scroll to a much clearer time frame. I have a daily time frame, and I saw this resistance hit one, hit two, and price came here again. So let me just zoom into it, and I was taking this trade, and what did I see? I saw this shooting star down here, and this was what an entry confirmation candle, and I saw two bearish candles. I saw this it tried to form an hammer, but what, it closed bearish, it closed bearish, and it's at resistance. So what will I do? I'm looking for a short position, and this is really just how simple it is to just take some trades, because you will just take a short position, and let's say you place your stop loss above the high of the candle, and you just targeted the next low. All right, that would have just given you a good trade, and you would have hit your take profit. We've not even completed it, and you would have already been hitting TPs from this so far. So with your entry confirmation candle, which is in line with what you're looking at, you will just enter those trades at the close of it, and you'll be looking for the next zone as your target. Okay, then after that, you mark out your risk reward before entry. Okay, so the first thing I did was, when I took that trade, the first thing I did was to clear out my risk, which was what, above this, then looking at my reward. Okay, so you don't want to be taking, first of all, you look at the reward and you now see that the risk is like, oh, a whole lot, and like, no, you don't want to be entering trades like that. So first thing is, first mark out your risk. What am I risking, and what's my reward like? So that's how best to enter trades like this. Okay, so with all this, let's paint out a simple top-down analysis, and I will just take up all these steps one by one. So the first thing was to do is to identify our trend of the market, and we've identified this previously as a downtrend. And the next step is to identify our areas of values, and we've marked out possible resistance. Okay, clear resistance. And what was this? This was a beautiful support that turned to resistance. So this is a clear area of value. Okay, this is a support here. Price broke the support in line with my downtrend. So what will I do? That support would most likely act as a resistance back again. Okay, so then you look for possible targets where price could be headed. So if I was taking a trade here, this would be my next target, which is here. This is going to be my next target. Okay, a clear next target here, because price stopped here before and come here again. So I'll be looking for a target around this point, and I'll look for an entry confirmation candle, and I would have just gone to a smaller time frame to take an entry confirmation candle. But if I was taking an entry confirmation candle here, okay, let's just go straight to a smaller time frame so we can look at this clearly. Okay, I think yes. All right, so we are here, and I saw an entry confirmation candle around this point. Okay, this is my resistance zone. I saw a shooting star followed by a bearish candle closing here. All I would have taken it. Okay, taking this position in line with it. Okay, and what will I be looking at? I'll first mark out my risk, which is going to be above the close of the first initial bearish candle. It was what this shooting star that would show bearish pressure. I'll put a stop loss above it and target my next, and I would have seen what my profit being just hit beautifully. Okay, so you followed me all to the end of this video, and this is a bonus tip to you. So before entering a pair, you want to be entering pair based off different pairs. There are different pairs with different market sessions. So another tip is to look for very tight spreads, because spreads favor you as a trader. So you want to be looking for very tight spreads, and when you see those tight spreads are that will be in line with the pair you are trading around those zones. So you're looking for New York session, you're looking for USD cross pairs, Asian session, you're looking for JPY pairs. You don't want to be trading USD pairs in or you want to be trading minor currencies in during the Asian session. You see some very crazy wide spreads that would just could just hit you out before any major move is made. So take or enter pairs, watch out for the session to get very good spread that would favor you when trading. So these are just simple ways to analyze a forex pair, or the best way you can analyze a forex pair. I remain Trader Miju, and bye for now.